Welcome to our weekly China Tech Chat. In this podcast, we are talking about topics that move the Chinese market, topics that are located in the realm of venture capital, innovation, global supply chains, and anything that has to do with international business. And today we're starting off with a very interesting topic, and that is why is manufacturing moving away from China? We want to discuss basically the background behind this notion and the reasons for it, and what we think about the future development and how current trends are influencing this. Today we are not starting off with guests, but we are just us two, Betty and Kimo. And let's just really quickly talk about why this topic is so interesting. So this topic is interesting because China has been the factory of the world, has been coined the factory of the world for years now, and people have taken that for granted, and also the Chinese people have taken it for granted. But recently the development has changed this status quo, and especially with the pandemic and the lockdown, the urgency to talk about this topic has increased. It basically was lurking for a couple of years there that manufacturing was going away to India, it was going away to Vietnam. But now, especially with the Shanghai lockdown, this topic is on top of the head of all investors again. And people are asking, is it basically now an accelerated trend that China is not a single manufacturing hub of the world for the next 10 years anymore? And will this basically be taken over, or will there be multiple manufacturing hubs in the future? And so I think this topic is especially interesting in the current conversation. So, yeah, Betty, what do you think? Do you think we have still have time for China to still be the manufacturing hub? Or is it actually a very difficult situation for investors now to look into China as a future of manufacturing?
Yeah, I think there are several different approaches that we can take. Obviously, it is true that manufacturing is moving away. So there's parts of manufacturing moving to other markets. But I think what we need to do is having a look at what parts of manufacturing are moving away and which parts aren't. And I think it has a lot to do with geopolitical tensions. So I think sometimes there's national interests behind divestments of certain industry sectors. I'll tackle the two quickly, what I found, because I think we both did quite interesting research. So what I found is that extreme decoupling cannot be expected. There's some parts that are moving away, like textile, shoes, electronics. Sometimes electronics, because also China is still trying to be the electronics factory of the world in the future. All the parts that are moving away have comparatively small margins, simple production processes. So it's typically the normal outsourcing. So there have been examples like Samsung moving away the electronics manufacturing. There have been examples like Adidas and Nike moving away their shoes manufacturing. So these are examples for this part. And when it comes to geopolitical tensions, it has been Japan and Taiwan mainly motivating their companies to divest and move their productions away. And that was because they were particularly concerned out of their histories that there might be too much dependency on China. China's closing off, as you said, and this could be a big risk for these countries, and they need some independency. On the other hand, there are some sectors like complex labor-intensive manufacturing, which is still often staying in China, where they have dependency on components or certain suppliers or manufacturing clusters. And a lot of know-how is being put into empowering the partners that companies work with on Chinese ground. For example, when we're looking at manufacturing of cars, they have put a lot of work into establishing these joint ventures in China, and at least the labor-intensive and complex manufacturing cannot be easily moved.
So you're saying basically because of the established infrastructure, there's kind of already like a network. If you think of Porter's diamond model, they have, for example, the factor conditions of good education that is basically funneling into this industry. And China has one of the best infrastructures in the world. That's also pretty interesting. Because if you look compared to the US, China has a way better infrastructure for the roads, is way better interconnected. Also, transport there is super up to date. So from infrastructure perspective, China has been the factory of the world and also will have a foot up in this perspective. I think it's super interesting to see, despite all this, the infrastructure, the knowledge, that China is still kind of wavering away as being the single manufacturing hub of the world. And I think there are like three main reasons why this is the case. And one of them is basically that China has turned away from just being a developing country to kind of become a developed country to some extent. Obviously, on the countryside, that is not the case, but in the cities, it is very similar to a developed country. And we can see, for example, in the 90s, the average labor cost paid in the Chinese worker was $150 per year. And now we look at $14,000 per year, which is a huge increase. Yeah, it's crazy how this basically has changed. And obviously, manufacturing can't be done to the same price anymore. For example, like hand painting figures or hand painting equipment was very economical in China back in the day. But today, it's simply not possible there anymore. I don't think it's possible anywhere in the world anymore. But at least in the Vietnam and India, it's cheaper than in China. So this manual labor is still possible around the world. And if companies want the manual labor, they can't go to China anymore.
Exactly what you said is completely true. And I think there's another aspect to it. Whenever you need repeatable output quality and you have no range for errors, or if you are selling luxury products, then it's really important that you have more of a automation expertise where also human errors cannot happen. You could say the international IoT smart manufacturing of the world is also playing into the hands of certain industries, but obviously if you do not need this and repeatable output quality isn't that important, obviously then it's easier to move.
Yeah, absolutely. I think that the second reason, basically, why China is basically wavering away as a single manufacturing hub of the world is that they are basically doing debt trap diplomacy. So basically, what they're doing, they're grabbing in Africa, they're grabbing resources in Zambia, in Djibouti, in the Congo, and are facing big challenges. Those countries are basically facing big challenges to pay back the debt to China. So the world has been looking how China is basically treating their economic allies or economic partners, and basically China is exercising a lot of power over them. You can see it in the example for the Sri Lanka port, for example. And this port is now run for the next 99 years by China because Sri Lanka just couldn't pay back their debt to China, which is an impossible situation, right? We see, and the world is seeing basically what happens if you give all this power to China. And this is not like a single example. Also, the Chinese government is also giving the companies an unfair advantage by providing very cheap resources to them and basically subsidizing them to a high degree. So other countries feel like China is just getting too powerful, and that's why they are maybe taking short-term profit cuts, but on the long term, it's also a political objective, right? Yeah, foreign companies are reluctant to basically invest into companies that are focusing on Chinese manufacturing because stakeholders and shareholders of those companies are not really willing to support that. Some of the shareholders are basically also connected to the government, for example, the US government or European government, and they're seeing, okay, China is getting too powerful. China is not just a place to exploit cheap labor anymore, but they are a world power, and if we give them too much business, then they're basically going to overrun us. And so where the Western countries are taking profit cuts in the short term and moving to Vietnam and trying to establish their new factories and trying to grow capabilities there for the future in order to kind of distribute this power structure a bit better. And in the long term, that's just a better deal because if China gets too powerful, they also have more abilities to negotiate the terms. And so it's kind of a simple multi-sourcing strategy that basically it's a disadvantage in the short term, but on the long term, establishing a new factory hub in Vietnam, for example, or India, will bring benefits to the companies that operate, and big companies can steer this kind of things in the long term.
I think everybody's trying to spread their risk and try to establish more factories and more sources for component sourcing across the world to keep their investors happy, as you said. But still, there are dependencies. And this is interesting because I think China has been really strategic when it comes to building this dependency. and making sure that some parts of the businesses still stay in China and that they can still benefit from these businesses. And I've done some research when it comes to robotics, because we were just talking about industrial IoT and smart manufacturing, the automation processes, that China is also stocking up in this. So they are investing a lot in robots. They are doing a lot to actually become the number one. And I think in this area, if you look at the numbers, it's actually the biggest market for industrial robots since 2013. They already held 41% of the whole industrial robots market, and this grew by 10% in the last years. And they're actually installing 170,000 new industrial robots per year. And that's an increase by 1/5 in the last years. And this is impressive. But then when it comes to the robotic density, they are not as great yet, but they are definitely investing heavily in this. Currently, they rank 15th rank compared to other countries, of which Germany is actually rank 4 right now. And to reach this independence, they're investing in own domestic robotics companies, which I find interesting. So while they have been buying robots from Japanese manufacturers and German manufacturers in the last years, now they are investing heavily in their own manufacturers. And they are at 40% right now, but by 2025, they want to have 70% nationally manufactured robots installed in their factories. And this is really impressive, because this also means that the global manufacturers will no longer sell big to Chinese factories. So for their own manufacturers of robots, there will be a lot of profits, a lot of opportunities. And this is, I think, one of the things that everybody needs to be aware of. It's good to sell to the Chinese market, but there's still risk that they will be pushed out of the market.
Okay. So you're basically saying that the Chinese robot manufacturers are also trying to manufacture more and more for the home market, because in the past it was more of an export business for like STP Robotics. A lion's share of the business has been historically exports. But now that's shifting, because Chinese companies are also trying to optimize the manufacturing in an automated way. Is that what that you found?
Yeah, there's two parts, I think. They had to import a lot of robots in the past, and they were quite dependent on international suppliers in the past, while having these big goals of becoming the smart manufacturing hub in the future. And in order to not be as dependent themselves, they needed to just build their own industry, their own robotics industry, empowering their own startups, empowering their own state-owned enterprises. And when we were talking about dependencies, and you were saying everybody is just a bit anxious about being too dependent of China, I think we see that in the robotics market as well, because the robotics companies have been very happy to sell to China, but now they are being pushed out. So while we are growing more dependent when we want to manufacture in China, we're not having as much access to sell to China anymore. So there's less opportunities for international businesses, while we see more dependencies.
Yeah. I mean, that this goes very well into the second point that we mentioned, why investors are trying to avoid China, because China is becoming just too powerful in all directions. They have the tech to provide to their own market, or they have the tech to export. And I think international countries that do business with China are just afraid that China is getting all the expertise in all the relevant fields. And if they give away even more like manufacturing offers or manufacturing requests to Chinese countries, and giving away their expertise as well, because Chinese people are copying a lot, then they will lose all power. So that's also a reason why they try to run away to other countries now, because China is so quick in adapting, right? And I think that really plays well into what we know about China, as is the current generation of Chinese. They are very hungry, right? Because the last generation of Chinese has been suffering famine, and this generation is like really hungry for like taking the risk, being innovative. They have like really this culture of try and error, and not just like, okay, there's a lot of bureaucracy. Like there is also like a limit to what you can do, because the government is basically saying, okay, you just play and do whatever you want, but to a certain extent. And then we just draw the finish line and just regulate. But to that extent, China innovators can basically play as much as they want. They're able to try out things. There's not a lot of bureaucracy hurdles, as in Germany, for example. In Germany, you really couldn't do a lot of things you do in China at the moment, especially with the data protection. You have to jump a lot of hurdles to get going at all. In China, these things move a lot faster. So China is kind of a petri dish for innovation. in the lower levels of a bureaucracy until it basically gets political, right? It's easier for China to basically go ahead and try things out. It's easier for entrepreneurs to do things, but this is only possible to a certain extent, because when the government doesn't like something, they will act rough, and they will act in an extreme way that you wouldn't see in Western cultures.
Yeah, I was actually thinking they're still quite dependent on other players wanting to manufacture in China. So did you read this when Japan was really calling their businesses to come back to Japan and divest in China? And there was complete villages or smaller cities that had to close with the factory. The restaurants closed. Like a lot of people lost their job. Since manufacturing is one of the pillars of the Chinese growth, it's important that these factories keep running. It's not necessarily always only seen as employment factor. I think employment is important, but they also know that with the climbing and rising wages and hitting automation, there will be more people losing their jobs, and that's already happening. So a lot of people that are losing their jobs in factory due to automation are now moving to the service sector. But what China definitely needs, no matter who does the labor, is the manufacturing itself, because this is a major growth factor for wealth in China. So if businesses, no matter where they're from, are moving their manufacturing and going to Vietnam, it can be a big problem for China. And there has been bigger initiatives to keep especially the Japanese investors or companies in China and to make them offers to stay. So yeah, I think it is also a pillar of future growth. You mentioned the pandemic and also the lockdowns, with so many businesses being heavily affected. And I'm sitting here in Shanghai in the middle of the lockdown right now, and it will be important to see what they are willing to do to keep international business.
Yeah, I mean, I heard also on the news something about closed loop manufacturing. So, I mean, obviously the Chinese businesses go to great lengths in order to stay competitive. And this has been a trend since the start of the pandemic. They had the zero COVID policy that they said, okay, we don't want to have any, if there's any infection, we just try to quarantine it. We just try to really separate them and not have any spread. And so they were able to continue manufacturing when the West was basically in a state where the economy was not going anywhere. So they had a huge advantage during that times. But now that the lockdown is hitting the major city of Shanghai, this is a different extent. And if China can't get the lockdown under control, this advantage that they had by the zero COVID policy could actually turn into a disadvantage as they can't operate normally as the Western countries can do now with their vaccination in effect, right? And also they kind of go with a paradox, right? They have a paradox set of goals. One of those goals is basically to have economic growth, and the other one has a zero COVID policy. So it's impossible to have like both at the same time. Either they want zero COVID and then they take the economic price for it, or they say, okay, we want economic growth, but then really can't have a zero COVID policy, because it obviously comes with economic downturn, because not everybody can work all the time. It's impossible that the economy can continue at that speed. Not every company can have a closed loop system where the workers are basically living in the factory and sleeping on the floor there for the next month. And this is just an impossible situation, I think.
Yeah, I was actually thinking and asking myself whether there's going to be more opportunities to handle these kind of situations in the future when looking at the smart manufacturing and also talking about the industrial metaverse, that you have like digital twins of your factory and you can just run certain processes out of your home office with completely automated processes, all
Right.
done by robots. And I mean, like robots picking up the components in one of the warehouses, delivering them to the right robots, then the robots doing the whole manufacturing, and then other robots taking the finalized product, putting it on a truck, and the truck autonomously drives away. So there's like imagining the future. I think there will be less dependencies, but there's always a human factor involved, and not everything is fully automated yet.
So what does the metaverse have to do with manufacturing, and what does it mean for investors? How can they profit from that?
So like the metaverse, you can think it in an e-commerce way. we as individuals what are we going to do in a completely digital world? That's, I think, what most people think of when they speak about the metaverse. But there's another level to it. That's what investors, and I have a VC background, what we call industrial metaverse. And this is, you could say, a digital twin of the whole business processes and the factory and the whole logistics that you have in the business, so that you can do predictive maintenance for your machines. You can train people in virtual reality and empower your employees, even if they're not on the ground. That you have 24/7 precise image of your bottlenecks, of your costs, of your profits, the delays, the problems, the errors, everything that's really happening in your business in a completely digital world. And this is where actually manufacturing is heading. So there's certain automation right now, but in the future, it will all go into, you could say, a digital version of the reality.
Right.
And managers will have access to this virtual business from anywhere in the world. And obviously the components or the machines and everything involved in these processes will be like more and more automated as well.
Okay. And if you're like trying to directly go into this branch and look for hot investments that are currently happening, what would you look at? Would you look at startups that are basically in the AI space, or would you more or less go into startups that are more in the robotics space? What capabilities are actually the ones that need to be bought by corporate venture capital in the venture capital branch, and what capabilities are already in place? Because I can imagine that currently the manufacturing floors are basically run on human labor to the most extent. So probably companies have been developing some kind of AI. They all state they have been developing some kind of AI, but they're probably missing the smart robotics and that component, right? So it's probably robotics focused startups, right, that can cooperate with big companies and help them with this problem.
Yeah. So speaking of China and the VC world in China, you see that most Chinese VCs have a background in e-commerce and the classical high scaling, high margins or high return cases. They are slowly moving toward more industrial use cases. So there's a trend towards B2B investment in this, like the robotic or business to business sector. When speaking about this, manufacturing, etc., there's two areas that VCs usually invest in. Like robotic itself is one of the two areas, but I would say the more interesting one for investors is still robotic process automation, or RPA. So that's everything that has to do with repetitive business tasks, big data, AI, like all that you just mentioned. So AI is definitely one of the topics, software that automates any of the processes, starting with purchasing, logistics, and the whole operation of robotics. That's all like interesting areas for VCs. You see a lot of VCs like Lightspeed China Partners, Sequoia Capital Partners, or Matrix Partners, all these like big VCs here in China. There's like some that are moving into this space. There is some challenges for them because they do not have the industrial expertise yet. So they're expecting the same scaling and the same returns as they are seeing it in e-commerce. And they sometimes do not have the expertise to actually coach these startups through the whole process. But it's happening, and it's also important that this is happening, because you can say that for the whole automation trends, investment is key, and it's a combination of these private VC funds and also state-owned VC money. There's something that's interesting in China. They have guidance funds. Guidance funds are funds on the local governmental level that are installed to push some industrial verticals like robotics, for example. And speaking of interesting funding rounds, there have been three that I found interesting. One was a robotics investment in MacMind. That's a very big robotics company. It was their Series C funding round. AI is one of their big pillars as well. So they have a machine vision algorithm and intelligent robot programming algorithm, and they raised 100 million in their Series C. This was led by Meituan, the delivery company, and this startup is actually among China's best funded startups in this category. Then we have two investments in the RPA space, the robotic process automation space. One is a really, really big funding round, also Series C, into Black Lake Technology. They received 500 million Series C funding, and this whole market is also because of them gaining a lot of momentum. They have investors on board like Xiaomi, then Xenopack, Tesla is also involved, and L'Oreal is also among their investors. And there was another one that I didn't know before, Laie, 50 million Series C, smaller funding round, but there's a lot happening in this space. And I think we can expect a lot of momentum.
Okay, yeah. So we've been basically talking about two of those three pillars. Let's just go really quickly into the third pillar, why manufacturing is moving away from China. And I think it's one of the most up-to-date and most pressing pillars at the moment. And it's concerning the disruptions that are currently happening in China. So many countries are dependent on China as a supply chain partner and also for supply of goods. Due to the recent lockdown in China amidst the corona crisis, we have seen a lot of disruptions that have been unprecedented and have not been expected by the world. So we see that supply chains are basically moving away from being global to a state where they are becoming more domestic again. And this is just one of those examples where it has a direct impact on a country. Because China was a partner that has been supplying products from afar, being a target for international companies for cheap manufacturing and not manufacturing in their own country in order to leverage geographical arbitrage. But today we have seen that within a few weeks, this whole very thin stretched supply chain can basically be disrupted. And so companies are becoming more cautious in how they structure basically their global business. So they're either multi-sourcing or they're cutting out China as a whole basically and see that they can do the same manufacturing locally. So we have seen all this trend that China is becoming too powerful, that China is basically not becoming as cost efficient as it was before. And now we're basically also seeing that disruptions are happening on the global level. And if it basically happens, that China is becoming so different from the West with their policies, and we see lockdowns over a month at a time, then we can see this trend will actually accelerate. The question is here, what can China do in order to counteract this? I mean, we talked about a few of those countermeasures that China is taking. We've talked about how China can be a leader in AI, can be a leader in the Metaverse, and can really push forward how they manufacture, and to the degree that they have fundamentally strong expertise in this field that cannot be replaced. And we see that in China there are certain startups, there are certain venture capital streams that go directly into developing AI-supported manufacturing. China is not only cheaper, but also can do things that the West can't do. And this could be the only edge to keep manufacturing really in China, because price doesn't pull anymore. And also politically, China will not be like a prime target anymore. So the only way forward for China to keep the manufacturing within the country is basically to develop capabilities that are not in place in other parts of the world. But we will see how that works out. So yeah.
Yes, we will have a close look at this manufacturing trend. And I think there will be so many different developments that it's probably worth having a closer look at each one of them in our next podcast to have a more complete picture.
Yeah, absolutely. We will definitely have some connecting topics to this. So I think that is a good foundational topic to understand where the current trends are going, and we will definitely build up on that. So yeah, Betty, thanks again as always for your time.
It was a lot of fun, Kimo. Thank you very much.